We start today's market talk. Diwali is a time for new beginnings, and the worst seems to be behind us as we step into the new Samvat year. Last Samvat, Indian markets faced Trump's tariffs, conflict with Pakistan, FIs selling, drop in corporate earnings, and a wobbly rupee, and a scare for IT companies. So, as we approach Diwali, a festive glow is clearly visible. Market outlook. US China trade war has escalated. China has imposed restrictions on exports of rare earths, and Trump has retaliated by threatening to impose 100% tariffs on import from China. Because these materials are hard to replace and concentrated in China, it has extraordinary leverage. Markets are hoping this is just a prelude to a deal. Otherwise, despite a control over key technologies, China is vulnerable to weak global demand, has issues with low domestic demand, and falling prices and fiscal pressure on local governments. Domestic macro setup is the best it's been in years. Coming to India, retail inflation is down to 1.4. September food inflation is minus 2.3%. This is with GST cuts, which should nudge the urban consumer to start spending. MPC minutes indicate that rate cut is certain in the next meeting in December, and FPIs are turning net buyers marginally. So everything is looking better. Hence, so this is a time not to be negative on the markets, but to be positive. Now, remain bullish on gold and silver. The reason is geopolitical tensions, tariffs by USA, rate cuts, and excess liquidity have led to a safe haven buying in gold and silver. Uh, the spot silver was trading higher than future prices, which triggered a fear of missing out of buying, and which led to a big amount of buying in silver ETFs and etc. Where now the prices are correcting. So do not panic and sell your gold or silver because it is too late to go for quick profits. The basic reason for upside in gold and silver remain in place. Hence, hold on to your positions. Coming to FIDI data. So if you see here, FIs on index futures are net short. For they have turned bullish on Nifty and Bank Nifty, where they've added long positions on Friday. And then on in terms of index options, they have turned bullish by buying calls and by adding puts, but puts are much lesser on Friday. So overall, if you see here, they are net positive. Pros, professionals, so if you see here, professionals are net positive on index futures. They have bought calls and they have sold puts. So they are also net positive. Clients, they are net long, though they have reduced certain long positions, 1.09 lakh positions. And in terms of index options, they have sold calls, but they have sold more puts. So they are also net bullish. So basically, pros and clients are bullish, FIs are bearish, but uh, both sides are now reducing their hard positions from in terms of bullish and bearish, and now there is an equilibrium getting maintained between them. And in terms of cash, FIs have turned net cash buyers, and so is the DIs. In terms of cash buying, uh, DIs have been buying throughout the month. FIs have now turned cash buyers. They have reduced their index short positions. So from 1.42, it went up to 198 lakh short positions on index futures. But it has reduced to 1.63, and that has led to the rise in the market from the lows of around 24,600 odd. So from those levels, markets have risen to now 25,600 levels. And on last 2 3 days, they have been turning net bullish in terms of option position. So the markets are going up. Coming to US indices managed decent gains. Trade tensions between US and China, government shutdown, and a scare over health of regional banks was digested. So if you see here, the US bond yields are coming down, which is positive. It has come down below the bottom trend line. So once it breaks this, then we should see lower positions. Dollar index is also correcting, basically on the premise of more rate cuts in the US. It had gone up last week basically because the other currencies, that is Japanese currency and euro, were correcting or becoming weaker. But now it is correcting on its own. Brent could correct it because there is a possibility of greater supply from OPEC plus reduction in tensions in Middle East and with Russia also. Gold continues its rally. As I mentioned, it is a play on uncertainty and it just keeps going down. It has corrected from that high of 4,400, but above 44,000, that is this trend line support, uh, remain positive. Similar with silver, the gradient on the trend line is going up, so it is turning bullish. So it went up to $54 to the ounce, has now corrected to below 52, but same, this 50 should be your stop loss in the present rally. Copper has corrected a bit, but there is no significant increase in demand for copper, which is expected. Bitcoin's corrected. There was a long unwinding which took place. It corrected around 7% last week. So it is also now moving with respect to equities on based on news and not related to a storage of value like gold or silver. S&P 500 was up 1.7%. Nasdaq was up 2.46%, and Dow Jones was up 1.56%. So, despite all the negative news, US markets closed or were up throughout the last week. In India, the India VIX went up on Friday. So, it was up around 7% on Friday, basically because a lot of earnings were due on Friday evening and Saturday. So, because of this reason, people would have taken protective positions in uh, puts. So here, right now, it should come down. Uh, Nifty has, on the weekly chart, was up 1.68% last week. It has broken above the declining trend line from the last high it made in September last year. And this is on a fresh high. For this calendar year, this is at the fresh high. So it has gone above that. Now in this rally, 25,300 should be a support, and it can go up to 26,000 and above. Uh, the rally has come on weak market breadth, so that is the only thing one has to be careful. But it is well above the 20 EMA. On the daily chart, it has broken the intermediate high it made in June, and now it is well above that. So it has breached the 25,700 levels. So it should go up from here. Uh, Hourly charts, if you see, it had become slightly overbought on 17th, but then corrected. So even if there is a dip to this 25,600, 500 level on the hourly charts, it should find support here and then go up from here. Nifty Bank was up 1.95%. Post the RBI policy, there has been a significant move in Nifty Bank. So if you see, since October, it has in 2 weeks, it has gone up, made fresh high, and in this kind of a momentum, it can easily go up to 58, 700, 800 levels, which is Fibonacci extension way of working it out. On the daily chart, it has breached through the last high, and momentum is looking good. This momentum started from October, and in September, it tested the 200 EMA. And from there, after the RBI policy and positive actions towards banking, Nifty Bank has been doing well and has been leading Nifty higher. Nifty IT is in a decline. It is below the declining trend line. So if it breaks this 200 EMA at 33,850 odd, then it can head to around 31,000. Metal index is consolidating at its previous all-time high. So if there is some more push, it can go up, or otherwise it will come and test the 20 EMA. Autos again, it was consolidating. It had a dip. It made a tested the previous high, it had a dip, consolidated, and now it is going up. It was up 1.9% last week. So let's see what happens from here. Pharma is moving up. 3 weeks it has moved up, basically on positive sentiment around generics, where the US said that they will not put any tariffs on generic drugs from India, and also the positive sentiment on CDMOs, because if the Biosecure Act comes, it will be negative for Chinese companies. So our CDMO companies should get decent businesses. Defense was positive, but it corrected. Now we'll have to wait for the earnings and all to see what happens from here. Midcaps consolidated, they made a doji and all. So I think once the VIX comes down and, and the market moves up, then the broader market should also follow. Similarly with small caps, flat made a doji for the last week, so it's undecided. Uh, Coming to Infosys, see on the weekly charts, it has tested that support of 1400 now 3 4 times in the last few days. So it's consolidating here. So this is expected to be a demand zone. The reason why it corrected around 5% last week was because the guidance for the FY26 was around just 2 to 3%. Now, if that is the guidance, then most of the thing is done. So the market is not expecting any growth in the balance part of the year. Hence, the stock has corrected. So let's see if it's able to take support at 1400. Now, coming to earnings, on Friday we had Reliance results. So if you see the results, revenue grew, the consolidated results 10%, EBITDA 14%, 14.6%, 50,000 odd crores, and profit after tax was 22,000 crores, around 14.3%. Strong, robust results. EBITDA growth underpinned by new initiatives, buoyant economic activity and consumption trends. Now, most of their revenue generated and profit generating segments are customer oriented, and that buoyant economic activity in terms of retail uh, and uh, and geo, that is communication, should help them. Uh, so they are having double digit growth in consolidated profit. Coming to their segmental revenues, oil to chemical did well. Exploration and production was subdued, but this is a smaller part of the earnings, just 5,000 odd crores. Balance are, in terms of EBITDA, are much bigger. Digital service was up 17%, retail up 16%, and others was up, other including media was up 10%. So consolidated EBITDA was up 14.6%. Uh, Coming to Jio, customer base is up. It is up 50 crore, above 50 crore. So subscriber addition was strong. Home connect and sustain additions in mobility. ARPUs were up to highest to 211, and this is after the last tariff hike which took place last year. Now, in case before the IPO there is another hike, then it should go up, and that should directly help the earnings. And data consumption was up, and per capita data consumption is also up. So if you see the earnings of Geo, gross revenue was up 15%, operating revenue up 15%, EBITDA is up 18%, margins improved. It's a 51% margin business, and it's got the highest margin among all the businesses of Reliance. EBIT was up 22% and profit after tax 13%. They did finance cost was up because they're doing some capex. So this is good, strong. Retail again did 18% growth, 90,000 crore revenue. So 17% EBITDA growth, and EBITDA margins though declined a bit, but profit after tax still went up 17%. Geostar, this is their digital and TV business. So revenue declined from last quarter, but that is because last first Q1 had IPL. Now this one doesn't have, but the EBITDA margins have improved substantially. So this part of the business should do well because the complete cricket and other entertainment is controlled by them. Exploration and production business saw degrowth. So the revenues fell 2.6%, EBITDA fell 5.4%. The margins also went down. The gross calorific value from KG D6 improved from the coal bed methane dropped a bit. So there is some decline in kgs D6 volumes, because of which this part of the business was affected. O2C business did well. Revenues were up 3.2%, but the margins improved. So EBITDA was up 20% and EBITDA margins improved 130 basis point. This is because higher fuel cracks. Cracks are basically fuel cracks are process of breaking large hydrocarbon molecules into smaller valuable ones like gasoline and diesel. So this is basically due to their refining margins improved. Uh, Offset by, though the higher refining margins were offset by stronger uh, official selling price of Middle East crude and weaker downstream margins, etc. But the volumes in their domestic fuel placement through Geo BP petrol pumps, so the volumes of diesel, HSD, and MS motor spirits, that is petrol, were up 34 and 32% sequentially. So they did well. And in their new energy business, they are now getting into renewable energy round the clock power plant, which will have both solar PV value chain and battery storage, energy storage systems. So for this, they are doing backward integration, polysilicon ingot wafers to make solar cells and then to make solar modules and into glass. In terms of battery value chain, they are getting into battery cells, battery packs, and BESS systems. So they will another year or so that these things should be operational. Manufacturing, they are trying to make electrolyzers, compressed biogas plants for green hydrogen and sustainable aviation fuels, green ammonia, external third-party sales, and captive RERTC for RIL's power generation. So if they are able to do renewable power for their own requirement, so that should help the margins because the cost will go down. Coming to their charts, see, this has broken through the declining trend line, heading up to 1416. So the first target should be this level of 1420. Once it breaks above that, then it can test this level of 1460, 1480, and above that, then 1500 and 1540, which is the previous high. So let's see what happens from here. It seems to have made a double bottom here, uh, say around 1360 level. It went up with large volumes in the last 2 days, and RSI is also strong above 60. So we'll have to see how the market reacts to their earnings on Monday. The earnings were stable. Now, next is ICICI Bank. This is a profit and loss statement on standalone basis. The net interest income, which is the core earning of a bank for Q2 FY26, declined. Core operating income was also lower. Core operating profit also declined, and core operating profit uh, quarterly also was just at the similar level. So nothing, no significant growth. If you compare year on year, that is with Q2 FY25, the net interest income was just up 7.4%, core operating income 8.8%, and core operating profit just 6.5%. So single digit growth. Uh, Exclude profit after tax improved after if you take out excluding treasuries, but though despite having core operating profit which was lower, the profit after tax and before tax improved is just because they have done lower provisions. But treasury income is still lower, much lower, so which has affected the overall profits as compared to last year. And this is a problem with all banks because the bond yields have gone up. So profit after tax is just up 5% year on year. Coming to ratios, NIMs have declined to 4.3. Cost to income ratio has improved. They have become more efficient. Return on assets has declined to 2.3. ROE has also declined now to 16%. So they are not that efficient. EPS was around 16.2, so average is around 70, and book value is around 436. So they are at around 3.3, 3.2 times price to book. So mostly fully priced. Uh, So if you see here, retail part of the business did well. It did decent growth Q on Q, uh, grew roughly around 25%. Wholesale also did well, grew around 8-9%. The treasury income declined, which have impacted the EBITDA and profit. Others were same. So that is why the profit before tax were lower Q on Q. Now coming to the technical charts. So if you see here, it made a higher around 1500, then had declined. Uh, Now from here, it made a base at around 1340 odd levels, then consolidated along the 200 EMA, and then it had broken out from the declining trend line above the 20 EMA. So we'll have to see if it can sustain this momentum. Otherwise, it may dip, test this moving averages or this declining trend line, and then we will see what happens from here. RSI is strong. Strong momentum is at 68. Now coming to the other result, that is HDFC Bank. Deposits were up 15%. Uh, Advances grew 9% year on year. NPA was at stable at 1.24%. NIMS came down to 3.27. Return on assets was 1.9, still below 2. Core cost to income was 39.2. ICICI was 40 plus, and capital adequacy is stable. So coming to their income statement, net interest income, we can't compare it Q on Q as we did for ICICI because they had significant non-interest income last year in Q1, which was due to their sale of HDB financials. Hence, we will compare it year on year. Not in net, non-net interest income was up around 5%, 4.8 year on year. Net revenue was up 10%. Uh, Provisions were higher, so they have increased their provisions. Like ICICI Bank, we saw lower provision. Profit before tax was up 11% and profit after tax was up 10.8. So similar. Net interest income is stable for the last 3 quarters now at around 316 billion rupees. And NIMs have declined because of lower interest on the uh, on the deposits. Profitability is improving and they are growing at around 10-11% year on year. Earning per share has reached around 12 standalone on 12 standalone basis. So book value on standalone basis is 340 and on consolidated is around 354. So they are at around 2.8 times price to book. So if you see here, it made a high at around 1020 and after that it consolidated and it then has gone up above all moving averages. So if it can continue this momentum, it will test this previous high. Otherwise, come and correct to below 1000 odd level, and then we'll see what happens from here. It has gone up in the last few days. RSI is now 70, so it's in good momentum on based on expectations of good earnings. Now, comparison of their key ratios and matrices. If you see year-on-year growth wise, uh, HDFC Bank is better, 10.8, ICICI Bank just 5.2. In net interest income growth of ICICI Bank is just 7.4. NIMs are better at 4.3 versus 3.27. So this should help the profitability. Uh, NPA ratio and net NPA ratios are stable. Provisions, they have declined for ICICI Bank. They have increased for HDFC Bank. So that shows that they had some concern over their loans. Domestic loan growth, 10.6%. And these guys, HDFC Bank is also around 9.9. Deposit growth is weak for ICICI Bank, 7.7. Deposit growth is strong for HDFC Bank. CASA ratio is much better, so the cost of deposit should be uh, lower. So that is why their NIMs are higher. Return on assets higher for ICICI Bank. Return on equity again higher. higher efficiency in generating profit from its assets. So return on asset 2.33 versus 1.9, return on equity 16 versus 3.4. So they are more efficient in terms of utilization of their assets and equity base. P ratio is lower for ICICI Bank. That means more attractively priced. Price to book is higher for ICICI Bank, 3.1 compared to 2.86. Commands a premium. ICICI Bank commands a premium in the market related to its book value, suggesting higher market confidence in its asset quality and future growth. So I finished. Uh, Happy Diwali. Wishing you all happy and prosperous Diwali. Thank you. We'll take questions now.